So should you get an FHA loan or a conventional loan? You know, that's a question that a lot of people getting a mortgage ask themselves. This is Rayce Robinson, your best source for all your mortgage information with the Robinson Mortgage Team. You know, if you're putting a big down payment, then you're more than likely getting a conventional loan. But if you're putting or looking to get a smaller down payment, then both FHA and conventional or Fannie Mae have great options. And there's actually advantages and disadvantages to both. It really depends on your situation. So in this video, I'm going to break down the exact differences between getting an FHA loan and a conventional loan so you can see for yourself. So come on and join me inside my computer and let's take a look. Okay, welcome to my computer. It's nice and warm in here. And what do you know? There's cookies. All right, so I'm going to go through this fairly quickly because I don't want the video to be super long. Definitely reach out to me if you have any questions on any of this. So FHA loans, why FHA? Has a low easy down payment. Not only is it one of the lower down payment programs, the ways that you can get that money through gifts and other sources is the easiest on FHA loan than really any loan out there. FHA has the lowest initial monthly payment than any program when you're putting a low monthly down. So that's because the big thing, rates are not impacted by credit score, which means if you have an 800 credit score, I have a 640 credit score, we're pretty much getting the same rate. Rates on an FHA loan are lower than a conventional loan, regardless of your credit score. So someone with a 650 credit score is going to probably get a better rate on an FHA loan than someone with an 800 credit score on a conventional loan. FHA rates are the lowest in the industry. The mortgage insurance on an FHA loan is lower on a conventional loan. It's not impacted by your credit score. So again, FHA in general has a lower monthly payment to start. It allows for higher debt ratios. It just means you qualify for a higher purchase price than on a conventional loan typically. And FHA works with lower credit scores. They have more flexible guidelines. They're easier to work with if there's any issues that we're going to be dealing with as far as the credit goes. And they do allow manual underwriting, which just means if we can't get an automated approval through the computer system, we can actually get FHA or a underwriter to make a decision without getting that automated approval. The big disadvantage of FHA is the mortgage insurance is for the life of the loan, which means when you want to drop it in the future, when you have 20% equity, you're going to have to refinance. Funding fees are 1.75% of the loan, and they're paid upfront. They get rolled into the loan, so it doesn't affect your cash to close. But if you think on a $200,000 loan, that's almost $3,500 extra you're paying as an additional fee to FHA to do an FHA loan. And it gets rolled into the loan, but it is an extra cost. FHA has a few more appraisal requirements than a conventional loan. And here's the big one. Realtors think FHA is a weaker buyer. It's not always true. In fact, a lot of times it's not true, but that's the perception. So if you're going up against a conventional offer and your prices are about the same, my experience is realtors will tend to steer those sellers towards a conventional offer, and FHA only works with primary residences. On a conventional loan, the mortgage insurance is not for the life of the loan, which means you can drop the PMI down the road without having to refinance, which is a big advantage. The mortgage insurance goes down the more you put down. So if you put 15% down or 10% down, that mortgage insurance rate is going to drop till you get to 20% down, where you don't have mortgage insurance anymore, or if you put 20% down in the beginning. And that people do ask me all the time on an FHA loan, if you put 20% down on an FHA loan, you still will have mortgage insurance for the life of the loan. There are no funding fees. That 1.75% does not happen on a conventional loan. It doesn't have to be a primary residence. We can do second homes and investment properties. Realtors consider conventional a stronger offer, which will help your offers get accepted a little easier. The big disadvantage of conventional, typically a higher payment, and that's because the mortgage insurance and the interest rate are affected by your credit score really drastically. So if you've got a 640 credit score, these rates you see advertised all over the place, you're not going to be anywhere near that. In fact, most of the rates that are getting advertised are 740 credit score and higher, loan amounts above 300,000, and 20% down. That's a conversation for a different video, but just keep in mind on a conventional loan, as your credit drops, your PMI gets higher and your rate gets higher and the payment gets higher. Lower debt ratio, so you're going to qualify for less of a purchase price on a conventional loan. The minimum credit score on a conventional loan is 620. On FHA, we do have some banks that will go down to a 580 credit score. There are no manual underwrites on a conventional loan, so you got to get that automated approval. Okay, so there you got it. Those are the main differences between FHA and conventional. Obviously, there's all kinds of other factors when you're choosing a mortgage and a mortgage company. For us, for instance, we do the no lender fees, the lowest cash to close, which helps whether you're doing FHA or conventional. We want to have you have the lowest cash to close with the best rate, the best overall deal on a mortgage, not just a low rate with high fees. So if we haven't spoken about your situation, you're not sure if you should be going FHA or conventional or any of the other loan programs that are out there, definitely reach out to us. I work hard to earn your business from start to finish. We're not just a mortgage company, we're a mortgage partner. We help you all the way through the process from start to finish so that you get to the closing table exactly as promised, and you know exactly all the way through where you're at. So again, if you haven't been pre-approved, you haven't figured out what loan program, or you just have any questions at all, please reach out to us. Again, I'd be honored to help. And if there's anything I can do, let me know. Make it a great day, and I'll talk to you soon. Bye-bye.